Risk versus reward. When it comes to investing, risk and reward tend to go hand in hand. That's because higher risk investments can also give you the chance at higher returns. Here's how some major types of investments stack up when it comes to risk and reward. Savings accounts are very low risk, but also low return. Bonds can offer more moderate return, but also come with more risk. Stocks are higher risk than bonds, but can also offer higher returns, particularly over the long run. Investing in startups can be significantly risky, with many companies failing outright, but others delivering substantial returns. And investing in cryptocurrency can be outright speculative, with cryptocurrency values swinging wildly, even within the course of a single day. Of course, there can be more than one type of risk when it comes to investing. Volatility describes how much an investment swings in price. Investments that are more volatile are generally considered riskier. Another risk is inflation. Investments with low returns are at risk of losing value to inflation over time. And finally, there's the risk of the unknown, like an unforeseen event that causes your investments to lose value. Investors often call these black swan events. Remember that investing always comes with some form of risk. The key is to understand the risks in your portfolio and to make sure you're taking on the level of risk that's right for you.
So that is Napkin Finance explaining risk versus reward. In everything we do, we take a certain amount of risk in order to see an outcome of reward. And this doesn't always happen. But what you want to do is take calculated risks, and those calculated risks would hopefully yield a relative benefit. While I would not advise that you invest in crypto because of the volatility of crypto, you can see that in the illustration, you see that crypto was placed at the top of the risk pyramid, which means that you could possibly invest in a particular type of cryptocurrency and lose the entire amount. Stocks are the next level down, and investing in stocks can sometimes yield a great benefit. And the purpose of this channel is to take a high risk approach to invest in one sector, namely technology, and see whether it can yield a profitable return. This is a high risk approach, and it's not meant to be copied, but it's meant to be studied over the years to see whether this approach really works, and to confirm or disprove the theory that investing in a single sector is going against the rules of having to diversify your portfolio. So as you can see, the performance for the month has dropped from 10.07 last week to 3.82. So given that we had the new inflation numbers in the US going up, that is reflected in my portfolio. And also the market's latest response to Unity's acquisition is also reflected in the drop for this month. So this week there has been 3 changes to my portfolio in which I acquired some more stock. So the first one is Unity Software, where I increased the number of stock from 12 to 27. Palantir, where I bought 2 additional stock, and Genius Brands, where I bought 100 more stocks. So those are the changes from last week. So that brings the portfolio size to just a little over 36,000. So this is the investment dashboard. I continue to improve the dashboard to make it more relatable and also make it a lot easier for people to identify the changes that are made from week to week. So as you can see here, I've included a stock quantity column and also a stock quantity change. So as I said in the previous slide, the changes are Genius Brand, Palantir, and Unity Software. My largest holding is still Amazon, followed by Palantir and then Tesla. When looking at the stock composition of the entire portfolio. So when looking at the overall percentage profit loss per stock, my largest loss position is Lucid, followed by Amazon and Genius Brands. So looking at the overall portfolio performance, the total portfolio allocated has increased from last week. The total portfolio's loss has also increased from last week, and the total equity has reduced from last week. The overall loss of the portfolio has increased from 16.85 to 21.17, and the overall portfolio performance from the previous week is down by just over $1,600. So that is just a summary of the portfolio performance in the last week. Please remember that this is a investment project that is not meant to be copied. It's just there for people to be able to study and see whether if you invest in a single sector with a limited number of stocks, whether that could pay off. So it's just an experimental project for you to study and not for you to copy. So I hope you found this useful, and I'll see you in the next video. Take care. Bye.